Hi, this is Scott McClymonds from CEO Velocity. We're looking today at the Customer 360 Executive Dashboard. This is taking business intelligence to the boardroom, to your C-suite. And the fundamental aspect of this is the profitability groups that we have here: end zone, red zone, mass market, lower tier. Of course, the end zone is the minority of your customer households, but yet they create almost 80% of profits. And you can see in this particular database, there are about 5,300 households. Looking at some of the metrics, the end zone household makes us about $27,000 per year, whereas the end zone, or the red zone, I'm sorry, still profitable, but about 5,500, 5 times less than the end zone household. Likewise, mass market households about 5 times less than red zone, and the lower tier households are not profitable. So we've got, for banks and credit unions, metrics on deposits, loans, and investments per household. So we know, for example, where the bulk of our assets are coming from. And we want to know the maturities of our deposits and loans and really pay attention to what these end zone households are doing year over year. And of course, we want our customers to buy as much of our product line as they possibly can. But here, it appears that the end zone households are not well sold into our product line. They only have about one product or service more than some of our other less profitable customer households. And that leads us to what I call the invisible risk in banks and credit unions, and probably in your company as well. That is the risk of attrition. The fewer products or services a household has bought, the more likely they are to leave you. So in the case of a financial institution, these 1,800 or so households are only a mortgage or an auto loan payoff away from leaving your financial institution. What does that mean? It means that when they go, you're losing about $27,000 per year. Can you really afford that? Now, a lot of banks and credit unions that I run into don't have account or household profitability, and that's okay. All we really need to do is to come up with a way to rank order these different customer groups to each other. So we can use some general margins, some general product margins, or we can even use balances and fees, or we can create custom profitability for you. The point I want to try to make is we don't have to have precise cost analysis profitability. As long as we can rank these customers using a simple methodology so that they stack rank relative toward each other, that's all we really need to go on. So I don't want anybody getting hung up on saying, well, how do you calculate profitability, or we don't have profitability. That's not really the point. As long as we can rank order the customer households, we can get a good start. So then from this executive dashboard, we have some fundamental strategic questions that we need to prioritize. And that is, who in the world are these end zone households? Are they small business owners? Are they retirees? Are they millennials or Gen Xers who are homeowners and who have strong incomes? We need to understand who they are before we can do anything, because what we want to do is increase our value to them. That's how we win. That's how we create differentiation among financial institutions, is to recognize who these profitable or highly valuable customers or members are, and start better understanding how to create value for them. That's number one. Number two is we want to start building a fence around them. So take that value that we've learned to create and build a fence around these end zone households because we don't want them to leave. And to that end, we really need to shore up our position here with these high risk households in the end zone. Of course, then that's we don't want to neglect the rest of our customer or member base, so we want to learn who and how to migrate red zone households up to the end zone. We also want to understand our mass market and lower tier households because there are some of them with the same kinds of demographics as in our more profitable segments, and so there's some low-hanging fruit there that can be migrated. We also want to understand our cost to serve them, to serve these less profitable households, so that we can determine ways to serve them, to serve their accounts that are low cost but yet highly effective, bring a lot of value to them, and drive down our cost to service them. So that's the executive dashboard in a nutshell. There is a lot here, believe me, and it is for the board, it is for the C-level executives, or if we're looking at commercial lending, for example, or mortgage lending, would want an executive dashboard for that division manager. In our next video, we'll look more closely at the end zone household and break it down a little bit further.